I've tested, written out, and assembled Roaring Kitty's strategy for free right here. After studying over 700 hours of Keith Gill's videos over the last 4 years, I can explain his philosophy, his methods, and his history that landed me one of the best stock plays ever in my investing career, leading me to find and buy Meta stock when it was at $88 at the absolute bottom using this same criteria. I even posted my thesis and updates like Keith did on Reddit, but I will also go over what costly mistakes I made along the way, as well as what current value stocks I think could potentially take off even more. Now this part is very important, because if I had known what I know now about this strategy and philosophy, I too would have held my GameStop position from August 2020 at my $1 average into the final part of the same squeeze I predicted. On this journey, we will also go over the unknown history, uncover the artifacts Keith left behind for us, these clues that could help anyone win the game if they had the same skills and applied them to their investing philosophy. So how did Keith Gill, Roaring Kitty, win the game? He's just dumb money, right? Some might say he had the game of life on easy mode, and consequently, he must have had some advantage that you don't have in the markets. Keith must have had a hedge fund helping him, or a Bloomberg terminal, or inside info. After all, the stock market is a rigged game, right? And you're left funding the company's next stock dilution, all because you're just another retail investor. Dumb money. Now remember, not every investor can do this. That's just the unfortunate part of the game. But for those of you who make it with me to the end of this video, you will have all the tools you need to start your own journey and potentially beat the game. This artifact is the most important because having a community not only supports your thesis, but challenges it, and it will help you hold on when you want to sell. But having other sources of income or a basket of other stocks like Keith had will help you endure the coming pain, because pain is a part of the deep value stock investor's journey. That year, the stock market would peak and tech stocks over the next 15 months would crash over 70%. Giving me one of the best opportunities I have ever had in the entire market. During the March of 2020 crash, I too was buying up dozens of stocks, mainly uranium stocks, that would soon go up thousands of percent. Now, I was a swing trader, so I got out of those uranium stocks, even though I knew that there was going to be a squeeze in that sector as well. I had sizable gains and I moved into GameStop at the time. This was August 2020 and it was around $1 average that I got these shares. And not long after, I gained a very nice profit and I decided to invest in uranium again because my thesis started to really play out in the uranium sector. The opportunity I would have in the next year was what I had been training for. Using the knowledge I gained while training with Keith, I had found one of the largest stocks in the entire world trading at 2015 valuations. This was October of 2022. Meta. Now, Meta had dropped almost 50% in months' time. Big YouTubers with billions of views were making videos about Meta's downfall. There was a war going on, inflation was running up, sentiment was at an all-time low, and I went in big. I even printed out Roaring Kitty's GameStop option positions that he had posted on Reddit and studied them. And I used this to be my motivation and kind of keep me in line because the sentiment on Meta was so low. So the stock was beyond undervalued. It had nearly dropped 70% in a short amount of time, making nearly $50 billion from Instagram ads alone. I too would discuss my deep value thesis points on Meta on social media and would speak to my good friend Lewis Morgan, founder of the billion-dollar fitness clothing brand Gymshark, about my deep value thesis for Meta.
Yeah, man, the market's just been crazy. I think we might be getting close to a bottom. I also bought some Meta, dude, at $92. The company is being valued, Meta at 2015 valuations, which is, they only made $17 billion revenue that year. And, they bought Instagram and all that, so WhatsApp, but it actually has brought in, $119 billion this year? Honestly, dude, $92. I still can't believe I got, some shares. I got like 1,000 shares or something. Value investing is just can't beat a deal like that. Same thing with Carnival. And I got a bunch of calls as well. I got like thousands of call options on Meta and then Carnival Cruise. And then hell, if we get like a crazy run up in the market, maybe exercise them.
The thing is with Meta as well, yeah, they might need to calm down a little bit on their spending into the metaverse stuff, but that no one can compete at this moment in time with their ad platform. You need to build a business at the moment still, you need Facebook and you need Instagram. And obviously the Facebook ad platform is unbelievable. Yeah, TikTok's great and stuff, but it's still not the same. I continue to make loads of money, so yeah, it's another smart move. Yeah, I'm also nibbling as well.
I put more into my Meta position than Keith did in his GameStop position into short and long-term Meta options because of what I learned from Keith. I also bought $250,000 in shares starting at $88 with almost 2,400 shares before Meta broke $100. I believe all that Mark needed to do was trim the fat, cut spending, run ads on Instagram Reels or WhatsApp, and help spread the internet to the hundreds of millions of people without it, and finally cut back on the metaverse spending. Yeah, that spending, the viral day in the life of all the social media meta workers that was going around at the time. I also saw and thanked Jim Cramer for crying at the absolute bottom of Meta's stock price when he went bearish against the stock.
I made a mistake here. I was wrong. I trusted this management team that was ill-advised. Hubris here is extraordinary, and I apologize.
Okay. What did you get wrong?
No, I was right, but I found the absolute bottom. But remember, this is not typical when you're finding a deep value stock. My options within a week were up hundreds of %. However, the stock had little downside in my opinion, and I would go on to post my thesis when it was $88 on Reddit, just like Keith did. And then I would post my updates on the position like Keith did as well. But this would cost me millions of more dollars in unrealized potential gains. And this was just like my GameStop position that I owned around $1, which would soon be worth an estimated $11 million 5 months later. Now, this wasn't my first deep value stock. Now, I've been investing in the market for over 17 years now. I also found the absolute bottom using Keith's philosophy when I invested in Carnival Cruise. Now, this was at early 1990 prices at the time, and this was just weeks before I invested in Meta actually. And this was mainly in shares and leaps, but I made enough profits when I sold that in the shares and the leaps to actually pay for my entire Meta position in the options. Now, Carnival Cruise stock was a lot riskier than Meta, but it was trading at the 1995 valuations. I believe there was pent-up demand for travel, and the TSA numbers prove that. And although its debt was big, I believed it'd have one last puff in it and that it would recover, and it did. Now, both of these positions were all inspired by Keith and his deep value option process. Now, the most important thing I learned from Keith Gill was something that I finally learned this year, and it was to hold on as long as you can when you find a deep value stock near the bottom. Therefore, I vowed to never make this mistake again and to tell others about it. Now remember, the biggest gains are usually made in stocks in the final 10% of the stock's peak. Now this is a lot riskier time to buy and sell because in the case of GameStop and Meta, at its 2021 peak, it would peak and then drop 70%. So both stocks would lose 79% over the next 24 months. But you and I will eventually have another opportunity like this. They happen.